Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Apple holds its first ever virtual worldwide developer conference, unveiling software updates across the iPhone, iPad, Macs, and Apple Watch, with developers watching from home. This amid continuing controversy and antitrust scrutiny of the 30% cut that Apple takes from the App Store. We're going to speak to the maker of a popular email app at the center of this storm. Meantime, travel as we knew it is over. That's according to Airbnb CEO Brian Chesky. Chesky sat down with us for a wide-ranging and rare interview. He likened the pandemic to World War II. How does Airbnb move forward? We will hear from Chesky later in the show. And did teens on TikTok tank attendance at President Trump's rally in Oklahoma over the weekend? Former presidential candidate Andrew Yang will join us to talk about that and the future of the Biden and Trump campaigns, plus his latest initiative to get tech companies like Facebook and Google to pay you for your data. First, though, I want to get a check of the markets. Our markets reporter Kaylee Lines is with us, has been covering the moves all day. Stocks rising, Kaylee, despite concerns about a resurgence of the virus in different parts of the country. Walk us through the day.
Yeah, it was really interesting, Emily. You had all three major averages closing higher by 0.6% or more. There seems to be consensus that, yes, the virus is nowhere close to being over, but there also seems to be a kind of consensus that it's not going to entirely derail the economic recovery, this resurgence that we're seeing. You see that especially in the fact that small caps also were up today by about 0.5%. Small caps have really, 1% have really been kind of a proxy, shall we say, for the recovery story, given that they are more domestically focused. That said, it isn't an overly bullish tone. You did see, for example, the safe haven asset of gold rallying. It's back up near a 7-year high. So it's not all in on equities. You're still seeing some more protective options, for example, beneath the surface. And that said, it really is more of a defensive sector in particular that led the equity market higher, in that it was technology really leading the gains today. Those mega cap tech heavyweights were leading the charge, and the NASDAQ Composite Index actually closed at a fresh record high. It was up for the 7th day in a row, which is its best winning streak in all of 2020 so far, Emily.
Meantime, you've got stocks like Zoom, Netflix, Peloton, all stocks that have companies that have been benefiting from this work from home trend. Why the new momentum today?
Well, it seems that investors don't necessarily think that the economic recovery is going to be derailed. We are going to continue to reopen, but maybe people aren't going to be too eager to venture back out into the world, into office buildings, if the virus is indeed still spreading. So maybe some of these names will still be getting a benefit here. As you mentioned, Netflix, Zoom, Peloton, all up by about 3% or more in today's session. Actually, all three of those stocks closed at record highs today.
Apple shares ending the day up. Of course, this on the back of WWDC, a big announcement that they're moving from Intel to Apple chips, not unexpected, but also some new software updates. How did investors view the changes that Apple announced today?
Well, they seem to view it pretty well. The stock, as you said, ended at a record high. It was up about nearly 3% in today's session, despite the fact that there was a bit of an overhang going into this conference, given all the drama that has surrounded the App Store, getting regulatory scrutiny here in the U.S. as well as in Europe, pushback from developers themselves. But investors seem to be focused more on the things they liked hearing from WWDC today. Perhaps it's those processing chips, the upgrades to iOS that are exciting them. And, of course, you have the fact that big tech was just rallying in a big way today. Apple definitely is part of that story, but you also saw the names like Microsoft, Amazon. They all actually hit fresh record highs. Valuations now well above $1 trillion, and Apple, of course, tops that list. Its valuation is now $1.55 trillion, Emily.
All right, Kaylee Lines, thanks so much. We're going to be speaking with one of those developers who was pushing back of the Basecamp email app a bit later in the show. Meantime, sticking with Apple, the company announcing the most dramatic changes to the home screen of the iPhone since it was unveiled in 2007. Apple CEO Tim Cook also starting WWDC on a more somber note, talking about racism and social injustice.
I want to address the topic of racism, inequality, and injustice. and to recognize the pain being felt throughout our nation, especially in our Black and brown communities after the senseless killing of George Floyd. And while the events of this past month are sadly not new, they have caused us to face long-standing institutional inequalities and social injustices.
Apple announcing a new developers conference for Black developers. And of course, they've also committed $100 million to fighting racial injustice. To talk about the other things that Apple unveiled today, including this big shift from Intel to Apple chips, I want to bring in Julie Osk, Forrester Principal Analyst. Julie, good to have you back with us.
Thank you.
How big a deal is this change that we expected, by the way, Apple moving away from Intel chips, moving into its own chips? What does that mean for the overall Apple ecosystem?
Yeah, I think it certainly gives them more control over the product and the services and the experience end to end. So, if they've got that capability and they've got that talent set, why not control more of the product end to end? It gives them more flexibility, certainly.
So developers, however, need to be on board in order for this shift to work, because it's a change in the hardware, which means that developers are going to have to make fresh apps that will work across all of Apple devices. What's been your take on the pushback that we've seen from developers about this 30% cut that Apple, to be fair, for many, many years has taken from the products and services sold via the platform? Do you think that right now there's something different happening?
Well, I think there is something different happening on at least two dimensions. So on one hand, I think if you look at the traditional sale of a one-time game or a one-time app, taking 30% of $1.99 is one scenario, and I think that's worked very well for them over the past decade or so. But then I think where you probably see this tension is more with somebody who's selling a subscription or a service or selling content, which then that begins to feel like a bigger cut, especially when it's of recurring revenue to the third party. And then I think if you look into the future, as more like banks and education and healthcare providers begin to provide services over this platform like telemedicine, I think it becomes more worrisome to those in the future who are thinking, am I going to give 30% of my revenue to Apple?
So do you think that Apple is in any way losing ground here? I mean, if you look at companies like Netflix and Dropbox, they don't give Apple a 30% cut. And I think the argument from developers is that, in some ways it's consistent, but in other ways, depending on the interpretation, the way that Apple has enforced these rules is actually inconsistent.
Yeah, I think it's, there's a lot of nuances in here, and I think that I would go back, Emily, to saying it's hard to look at like everything that's sold through the App Store and say the same rules apply to everything, because there's really, very differences here. In some cases, Apple is enabling an economy or an ecosystem here that wouldn't exist without them, and they add a lot of value in that way. And then in other situations, there's simply, a platform or more of, where it's more of a distribution channel and more of, a commerce or a marketplace for third parties who otherwise wouldn't have an outlet. But, as we look forward, especially when we think about the times right now, more consumers being at home, the growth of using mobile as a platform to deliver services that go well beyond where it is today is going to become ever more important. So sorting out the commercialization of this or the business rules, there's a lot at stake for even a lot more industries than there have been in the past.
Meantime, the EU is now pursuing 2 antitrust investigations into Apple, into the App Store, as well as Apple Pay practices. Apple, for its part, has called these investigations disappointing, saying they're advancing baseless complaints from just a handful of companies who want a free ride, that Apple wants to maintain a level playing field where anyone with determination and a great idea can succeed. How big a risk do you think this antitrust scrutiny is from the EU and also the United States, where you've got the House Antitrust Committee, for example, doing a probe into big tech, including Apple?
So I think it's very important for Apple to triumph here, because if you go back in history and you look at the telecom providers, the AT&Ts and Vodafones of the world that build out an infrastructure, both a wireless infrastructure and a broadband infrastructure that's been commoditized over time, they haven't benefited in the same way let's say it's Facebook or Google or Apple has, given the capital outlays they had to provide this infrastructure. And if I were Apple, I wouldn't want to see that replicated where, the devices or the platforms that they're building, become commoditized and they're left out of, the upside of the value that it generates.
So more broadly, what's your take on some of the other, absolutely, what's your take on some of the other software updates that were unveiled today? A hand washing monitor for the Apple Watch, the ability to use the iPhone as a car key. Those are the more sort of buzzy developments. But more broadly, you're seeing pretty dramatic changes to the overall look and feel of the software.
Oh, I'm sorry. To me, Julie? Or Kaylee?
Hey, Julie. Julie, can you hear me?
Yeah, I can. Sorry. Yeah. So
looks like we've lost.
Yeah,
oh, there she is. Just one last question. I'm not sure if you heard my question, but I asked just your take on the overall software updates and how dramatic they were today.
Yeah, so I think they are very dramatic, and they do show the design chops that Apple has, both from a hardware and a software perspective. If we look at both what consumers are looking for from these devices and the experience, as well as enterprises, they're certainly looking for more seamless experiences across the devices, and Apple achieved that. And I think more importantly, and perhaps more subtle, is their use of context to make these services more relevant to me, whether it's the content I want, my activity bars at the end of the day, the news at the beginning of the day, setting my alarm for me. So, we've always worried, and we've always known that mobile experiences in the future, or the interface, would become more contextual, and these devices would begin to act on my behalf and do things for me. But the challenge has always been, how do you do that without seeming creepy? So I think Apple did a really good job today of balancing, hey, we're using a lot of context and information that we have about you to simplify experiences, but on the other hand, here's all the things that we're doing to protect your privacy. So I think they addressed those two big issues, and I think it's a big step forward in terms of the experience and how intuitive it will be. I don't know that consumers will be able to articulate specifically what it is, but I think they're just going to say, I love it. It's so easy to use. It just works, but there's a lot of engineering that goes into that.
All right, Julie Osk, always good to have your thoughts here on the show. Julie Osk of Forrester Research, thank you so much. Coming up, we're going to be talking about some of these developer issues a bit further. We'll be speaking with the co-founder and CTO of Basecamp, the maker of that Hey email app that the App Store rejected but has since approved pending some bug fixes. We're going to talk to co-founder and CTO of Basecamp, David Heinemeier Hansson, next. Also, later this hour, our conversation with Airbnb CEO Brian Chesky. He takes us into Airbnb's darkest hours and how the company now moves forward. That's later on Bloomberg Technology. This is Bloomberg.
I want a little more data. We're still a little early in this crisis for me to feel clear enough about how this is going to play out. So we're not rolling it out this year, but we're definitely not committing to a timeline right now.
Apple kicked off WWDC today amidst growing backlash from developers angry about the 30% cut that Apple takes from services and products sold via the App Store. Last week, Apple rejected a popular email app from the store, its co-founder accusing Apple later of a shakedown. As of this morning, at least one version of the Hey email app has been approved in the App Store. Co-founder and CTO of Basecamp, the maker of that app, David Heinemeier Hansson, joins us now. David, thank you so much for joining us. So what is the very latest? You came into this weekend in a standoff with Apple, but they've now approved at least one version of the app. How did that happen?
So I sent out a couple of tweets late Friday afternoon, and at 9 p.m. Central Time, Friday night, they sent us a note back on the App Store saying, we've read your tweets, we're allowing the bug fixes that we held back to be released, and we look forward to working with you. So we were, of course, very happy to see that all these bug fixes that we were eager to get out to customers were being released. But obviously, Apple also made it clear that this wasn't over yet. So we parsed Phil Schiller, the VP at Apple, who's responsible for the App Store's comments to the press about what we had to do to get a definitive approval to exist in the App Store without the threat of being kicked out. And we made those changes over the weekend. And on this morning, we pushed those changes for approval. And that update, which adds a new free temporary anonymized service to the app, such that people can download the app and immediately use it for something, as well as the acceleration of our Hey for Work product that exists in the same app. We've rolled that out to a couple of companies. So that's now pending approval. It's been in review, as Apple calls it, since this morning. And we very much look forward to hopefully getting that approval. But again, all the power is in Apple's hands. They could decide any minute now to not approve our latest updates and essentially send us back to square one.
Now, part of the contention is the 30% fee that you would have to pay Apple, which is part of their generally standard policy. This is something that you don't want to pay. So if approved, would you have to pay that?
Absolutely not. We drew a clear red line saying we're never going to submit to a 30% shakedown of our business. And Apple seems to have accepted that. The 102 release that they allowed us to push out did not have in-app payments. We have said repeatedly we were never going to do in-app payments, and we are going to hold our ground on that. But there are other things that Apple can make us do that we will do for them if that's what they ask for. The rules seem to change quite frequently. There's a lot of unwritten rules that we thought we were all following. But now there's a new set of invitations, perhaps, if you will, from Phil Schiller to add these things like the free plan that you can try it out with and have the app work for the multi-user corporate version as well. So we're going to try those things. We're never going to give Apple 30% of our revenue. We went so far as to explore all the legal options that we had. And even though we spoke with several law firms last Friday about our case, and most of them agreed that we have a strong case, it just doesn't matter that much because even if you win your case, you're going to be 10 years into the future and Apple will have crushed your business in the meantime. So we really are at the mercy of Apple here. And hopefully Apple sees this as a wake-up call to be more fair, to be more transparent about what goes on in the App Store. And hopefully regulators see this too, that Apple has tremendous gatekeeper power. And the software makers like ours have to be on iPhones and iPads to be competitive. So we can't really just negotiate with Apple. Apple sets essentially all the terms, and we're left to merely comply. Well, I think we sparked up a storm here because we perhaps were one of the first developers who said, no, you can't just come on a bug fix update and ask us for 30% of our revenue. That's completely unreasonable. And we've heard for countless developers telling us that they've been shaken in much the same ways. So this is not just an Apple v. Hey, this is a structural and fundamental issue with the App Store.
Okay. So let me just point out Apple's position here because they say they're trying to create a level playing field. The vast majority of apps in the App Store don't make any money for Apple, and yet Apple services them. You do speak to some developers who acknowledge that this cut that Apple takes is kind of the cost of doing business for the promotion that Apple might give them, the processing of the fees, and yet you do have companies like Netflix, like Dropbox, that don't pay these fees. And so the contention is that Apple, while it has these rules, enforces them inconsistently. What do you think a better policy would be?
Well, first of all, give developers the choice as to whether they want to opt into Apple's payment system. There are many benefits to Apple's payment systems for certain type of applications. Apple already has the customer's credit card on file. They make it incredibly easy for customers to spend money in these applications. And if you're a kind of application that benefits from that, that's fine. Okay, do it. 30% still is outrageous. And if you look at other app stores that do not have a dominant position, such as the Windows App Store that charges 5%, or some of these gaming stores that actually have competition that charge 10 or 12%, you can see what competition does. It lowers the price. We're saying, give us the choice. We would not have opted into Apple's payment system. We don't want to pay 30%. We pay between 1.8 and 2.4% to process credit cards. We bring our own customers for our kind of service. Apple's marketing doesn't do anything for us. We're not asking Apple for freebies or favors here. And in fact, we already pay Apple for the right to publish on the iOS platform. Apple charges all developers $100 a year, which today goes quite a long way to cover basic things like traffic and storage. And if Apple wanted to charge us a fee to get an approval, we'd be happy to pay that as well. The 30% is just completely outrageous, and it can't be the deal that they force down everyone's throat.
Meantime, speaking of regulation, the EU has opened 2 antitrust investigations into the App Store, into Apple Pay. You've also got U.S. lawmakers, the House Antitrust Subcommittee, looking into big tech, including Apple. Take a listen to what Congressman and the chair of that committee, David Cicilline, told us about how he views Apple's App Store policies.
This is very concerning that the use of the App Store, developers who are startups are basically being forced to pay a ransom of 30%, or they are denied access to that marketplace. And, it's just coincidentally, Google and Apple arrive at the same thing, a third of the profit. And that sort of market power is very disturbing. If in fact it were done the way, in a competitive market, you might have a percentage as low as 2 or 3%, the way it is with credit cards. Even the credit card market is not really competitive, but it's still 2 or 3%. This is 30%. This is highway robbery.
David, what's your take on this antitrust scrutiny, given that, to be fair, Apple is not the most dominant mobile platform in the world, it's Android?
Well, that depends on how you either they're part of a duopoly and they share this with Google, but there are many ways to slice this market. For our kind of product, which is $100 a year for premium email services, Apple is absolutely the dominant marketplace. If you look at all the research into where North American consumers spend most money on apps and services, it's with Apple. Apple has the lion's share of that marketplace. So they already have a monopoly position within that. But I also think that Chairman Cicilline is absolutely right, that this is highway robbery. I testified in front of his committee in January on this exact issue with the App Store. This was well before we had any heat from Apple on this issue. I was simply observing what was going on. I was listening to developers and saying, this is not right. This is classic antitrust, exploitive, and abusive behavior, and it needs to be stopped. So I'm really glad that Chairman Cicilline's commission is looking into this. I'm really glad that the EU announced their investigations. It just so happened that the crazy timing was that the day we got denied from Apple and they threatened to kick us out of the App Store was literally the day that the EU announced these investigations. So it's high time that Apple is being investigated for their antitrust abuse, and hopefully something good comes of that. We're just trying to survive in the meantime, because if the firefighters show up to our business 3-4 years from now and Apple kicked us out of the App Store, well, we will have burned to the ground. There'll be rubble and daffodils. That's not what I want for our 56 employees. That's not what I want for our customers.
Quite a metaphor, David. Apple has opened up iOS now. As of today, they're opening up iOS to third-party mail apps. What's your reaction to that?
I mean, there's so many things here where the timing just seems incredible. We've been working on our Hey email system for 2 years. We've invested millions of dollars into the development. So for all of this to come together in just 2 weeks, it's incredible. But I'm really glad to see that. Like, Apple makes great products. I've been an Apple fan. I've been an Apple evangelist for 20 years. It pains my heart that I'm now under the thumb of Apple after promoting them and advocating for them, because they do great things in a lot of different areas. They do great things with privacy. They do great things with their products. We're developers. We want to make Apple's platform better. We dug the moat for Apple. They now sit with this gleaming castle that's worth $1.55 trillion. And in the letter of rejection to us, they told us, hey, you haven't been paying us for 8 years. The wallet is or the envelope is a little thin. Where's our money? Come on, Apple. We're making this platform for you. Okay. Developers are what created the moat for the iOS monopoly that you enjoy and profit from.
The timing certainly is something. Basecamp founder and CTO David Heinemeier Hansson, thank you so much for joining us. Keep us posted on the situation with Apple and the Hey app. Meantime, coming up, former presidential hopeful Andrew Yang today unveiled a new project to get Americans paid for their data. He will join us later in the show. Also, his thoughts on TikTok users potentially tanking Trump's rally. And Airbnb co-founder and CEO Brian Chesky takes us through the darkest hours through the pandemic. Brian Chesky will be here later this hour. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. A fraction of the crowd expected showed up at President Trump's rally in Tulsa, Oklahoma over the weekend. Reports that teens on TikTok and Korean pop fans on Twitter scooped up tickets for the event with no intention of going. For more on this, I want to bring in Rick Davis, a partner at Stone Court Capital, who is also the former presidential campaign manager for John McCain's campaign in 2008. He's also a Bloomberg contributor and has worked for several Republican presidents, going all the way back to Ronald Reagan. Rick, what's your take on this?
Well, I think we've just seen the newest group of people to use Twitter to influence the outcome of an election. It used to be Russians we were worried about. Now it's K-pop. I think it's an exciting development and something that a lot of people are talking about today. The vaunted Trump social media operation that set records for participation and attendance over the last 3 years got totally pranked. And I'm sure they're spending a lot of time today at Trump headquarters trying to figure out how to keep this from happening in the future.
Right. How big a miscalculation is this for the Trump campaign, which has expertly used social media, to be fair, getting now outsmarted by the very power of the platforms they themselves have exploited?
Well, I think there are two things happening here. One is the K-pop and the Twitter trolls influencing the reservations they got, which were, as they described, Brad Parscale, the Trump campaign manager, said were over 1 million people had RSVP'd to attend this rally. But the other piece to this is, when you boil it down, they knew they weren't going to get 1 million people to attend. They had it down by their own estimate to be 60,000 to attend this rally in Tulsa, Oklahoma, both indoors and outdoors, 2 separate events. And frankly, less than 7,000 showed up. So a tenth of what they actually believed would actually attend this rally showed up. So there was a failure on the part of the teams who were setting up the rallies and the venue, overbuilt this thing by a factor of 20. And then there was getting skunked on expectations built out in the press that this somehow was going to be the largest rally Donald Trump ever attended. So they missed on 2 occasions. One is easy to fix. Don't build a rally until you know how many people are actually going to show up. The other, the sort of attack on social media by these groups claiming to be friends and really wound up being pranksters, is going to be much more difficult for the Trump people to try and figure out how to deal with.
That was my next question. You know, these rallies are an opportunity for the campaigns to build their database, get contact information. If so many of the people who signed up are not true Trump supporters or even fake names, how difficult is that going to be to sift through?
Well, it's going to be very hard for the Trump campaign because they rely on people who sign up for these rallies to then get a lot of their communications, both advocacy, why you should be voting for Donald Trump, and fundraising. Most of Donald Trump's fundraising comes via the web. If you have signed up for one of these events, you've either got an email or a text field that's been filled out. And you're now receiving, I mean, there are probably lots of K-pop fans who are receiving fundraising appeals from the Trump campaign. And the Trump campaign is inundating people with these fundraising requests. So I'm sure there are a lot of hangovers with the K-pop community and TikTok who are sitting there receiving probably every couple hours some kind of a text from a Trump fundraiser to send money. So but that is also going to skew what they think their potential harvest is for fundraising, because they're going to be sending out millions of these donation appeals that frankly are falling into people who are just pranking them.
So here's the big question. We know that Biden raised more money than Trump in May. We know that he's leading in the polls. Is this a real sign of decreasing enthusiasm in Trump's campaign?
Well, we've always known that Trump had an enthusiastic base, and that base has stayed with him through thick and thin during this presidency so far. All the ups and downs, he's maintained sort of this steady 40% of the support. Both his job approval and the ballot hover between 40 and 45%. There's no indication that there's any lack of that, but I do think the lack of attendance at the rally is an indication that people aren't prepared to play the old game of packing the house for Donald Trump, giving him a venue that he can say to other people, look, I've got all these supporters, I don't need you. It's not like he's outreaching to influential groups that aren't already supporting him. So whether or not this really has a bad impact on his fundraising or his base of support in the core states that he's campaigning is too early to tell. But it's not a good indication for Donald Trump that business as usual, the way he's campaigned throughout the last 3 years. And remember, he declared his campaign open for business the day he was inaugurated. So he's been doing the same shtick for 3 years already. And that may not be able to last through this coronavirus period or in the form that it's been in with these big rallies.
Right. So does Trump need a shift in strategy? And is this good for Biden, given that, Trump's taking all the fire, being in the spotlight, and perhaps is it better for Biden to just stay under the radar?
Yeah, Emily, I mean, this is like the third shift of strategy for President Trump since the election period really began in the primaries. I mean, he's failed in a couple of different efforts to try and reboot his campaign or create a different line of attack against Joe Biden. And so this big Tulsa event was supposed to be a new way to reset the campaign, and that's failed. So there'll be another effort to reset. What form that comes in, nobody can tell. Will he try another a series of events, or will he start talking directly to the people from the Oval Office? There's a lot of different options that the President of the United States has. I would say Biden's lack of campaign doesn't seem to have hurt him a bit. He's up in the polls. His fundraising is high. It seems that the Democratic Party has consolidated around him, and he's taken advantage of the fact that Trump demands the attention, and he's actually having a couple of really bad months back to back.
It's going to be quite a few months leading into the election. Rick Davis, former campaign manager for John McCain. Rick, thank you so much for joining us. Meantime, we also spoke with former presidential hopeful Andrew Yang, who's unveiling a new project today to get Americans compensated for their data. He also weighed in on the Trump rally and the possibility that TikTok teens and K-pop Twitter users tanked it. Take a listen.
When we were campaigning, we were always trying to estimate how many people were going to show up to events. And a lot of it was based on signups. So I think those teens were very smart. I think that is what happened, is that they boosted the numbers to some inflated level. And then the true level was some fraction of that. So it just goes to show that, if you're going to run an event, you have to try and figure out who's signing up, where they live, and whether they're going to show.
Normally, it's President Trump that is expertly using the power of social media. On that note, do you think that the Biden campaign understands technology enough and can do what they need to do in order to break through, hold on to the momentum that they have, and generate the buzz that is going to be needed to win?
I think Joe is going to do well among many, many Americans because people know him so well. I do think it's going to be difficult for him to somehow catch up to President Trump in terms of his subscriber count or his social media following. So he should lean on people that already have pre-existing followings to try and amplify his message online. But Americans get their information from many different sources, and I believe Joe is poised to compete and win in the fall, even if his YouTube subscriber count doesn't quite catch up to President Trump's.
What do you think Biden needs to do in order to continue to gain momentum? Obviously, at a time when we're in the middle of a pandemic, you can't have in-person rallies generally. How does he break through?
Now, what's interesting is that I feel like this current landscape actually is favoring Joe, because the more we see of Trump, the worse he seems. And Joe is just rising steadily because we all are familiar with him. I think the Biden campaign should just keep reaching out to people in different quarters, because the fact is, if Joe reaches out to you and says, hey, will you work with me on this? Most everyone will say yes, because many people are very eager to see Trump out of the White House in the fall.
Now, you've been very busy since you left the campaign, and now you are announcing your own initiative to get people compensated for their data. Obviously, companies like Facebook, Google, Twitter, they make a lot of money on data that's created by their users. How exactly would this work? What would the nuts and bolts be?
Well, California just passed a law earlier this year, the CCPA, that gives consumers these data property rights that they did not have before. And so my new initiative, DDP, Data Dividend Project, is going to serve as a union for many consumers to negotiate with tech companies on our collective behalf. Because like you just said, you have Facebook, Google, these other companies that are profiting to the tune of tens of billions of dollars per year off of our data. And if anyone should be paid for the use of our data, we should be included.
Well, what's been the reaction from lawmakers here? I mean, obviously we have this privacy law in California, but there's federal legislation potentially pending that still hasn't happened on data privacy.
We can actually go on a state by state level, particularly because California already has a law in the books that's going to be enforced starting next week.
Now, you championed many progressive ideas during your campaign, including universal basic income. We're seeing Biden's policy and economic team coming together, and it is more centrist. What's your take on that, given that some of the ideas that you championed haven't seemed to take off within the Democratic Party?
There are now dozens of legislators who are actually championing emergency cash relief during the pandemic throughout the entire crisis, and we know this is going to extend for months and years. So I'm optimistic that Joe and his team are open-minded about different solutions to help us get out of this deep, dark hole we're in. The reality is tens of millions of jobs are gone for good. 40% are not going to come back, which would still leave us in a hole something like 2 times as deep and dark as the Great Recession, which took us years to recover from. When I talk to Joe and his team, they're open-minded about different types of solutions. I think they'll consider universal basic income and many other things.
So how often do you talk to his team? And is it to the point that if you won, you think you might have a job in the administration?
Well, our teams are in touch. I talked to Joe personally a number of weeks ago on his podcast. He's supposed to come on mine too, which would be a lot of fun. But our teams are in regular contact. I try not to bombard Joe myself because I know what it's like to be the candidate. You have a lot on your plate, particularly in his case, because we're all relying upon him to win in the fall.
So at this point, we're in a pandemic. We've got protests around racial injustice happening across the country. So not just a health crisis, but an economic crisis and a social crisis. How does that all play into who he should pick as his VP? Who do you think it should be?
Well, you hit the nail on the head that we're in the midst of what someone called the omnic crisis, where it's like you have crises compounding on each other. And I don't have any inside info, but I know that California's Kamala Harris is one of the front runners. To me, a lot of it is about Joe's chemistry with the person, because he's going to have to govern with that person for 4 or even more years. And he knows that chemistry better than anyone, having served as VP himself. So it has to be an individual decision for Joe.
You sued to restore the New York primary. Why did you do that? Are you trying to gain some leverage which would enable you to write some of the party's platform?
I thought it was a terrible precedent to just do away with the primary. You have mail-in voting. You have the capacity for people to vote safely. It just was going to set a terrible precedent that, say, you can do away with an election if you decide that that's what you want to do. And the federal court saw it the same way, said, look, you can't deprive people of their right to vote this way. So I'm really glad that the law and democracy prevailed and the people of New York can vote tomorrow at the presidential level as well as the local level.
But is that your hope of gaining some sort of leverage to be more involved in potentially developing the platform? And have you talked to the Sanders team about that as well?
I'm hopeful that the platform will evolve to include universal basic income and some of the other things that I championed. I just saw, Emily, there's a poll that said something like 75% of Americans agree with emergency cash relief for everyone during this crisis. The Democrats need to embrace that policy, because it's a winning recipe right now, given how many Americans are suffering.
Former presidential candidate Andrew Yang there, also an entrepreneur. That's just part one of our interview. We'll bring you more of that conversation on Bloomberg Technology tomorrow. Meantime, up next, our wide-ranging and rare conversation with Airbnb CEO Brian Chesky, the darkest hours of Airbnb. He talks about all of it with us and the future of the home rental service, plus his outlook on going public in 2020. That's next. This is Bloomberg. As cities around the world continue to reopen, global travel companies are expecting a surge in pent-up demand. But travel as we know it will never be the same. That's according to Airbnb CEO and co-founder Brian Chesky. In a wide-ranging sit-down, Chesky took us back to the beginning and Airbnb's darkest hours. Take a listen.
None of us were prepared for really a once-in-a-century crisis. Our industry, travel, has described COVID as big as 9/11 in 2008 many times over, something more akin to World War II. And when that happened, it felt like I was working on our S1. We were going to file it March 31, and it felt like 12 years of success, and had all these things, and life was great. And suddenly, you build something in 12 weeks, and you lose most of it in 4 weeks. I can't quite describe what that feels like, and it just felt like everything in the company broke. I felt like a captain of a ship, and a torpedo just hit the side of the ship.
Now, travel came basically to a standstill, and in many cases, people didn't want to travel or they couldn't travel legally. It was illegal to rent an Airbnb. What was the lowest point for you, the darkest hour?
There were so many dark hours. That's the old quote attributed to Winston Churchill: if you're going through hell, just keep going. And man, I will tell you, the first dark moment was when we had about $1 billion of cancellations from guests.
You also had to cut 25% of the company, and you gave, an incredibly generous severance package. Your note to the team, I could feel the pain in there. Talk to me about going through that process, cutting 25% of your staff.
It was the saddest thing I've ever done in my life, at least professionally. And we weren't sure if we'd have to do a layoff, and we had to face the hard truth that travel, we did not know when it was going to return. And we knew that when travel returned, it would be different. It would never be the same.
You don't think travel will ever be the same? What does travel look like?
Well, I don't know for sure, but here's what I'll say. Travel will be back, but it will look different.
What trends are you seeing in Europe, in Asia versus the United States?
So United States has been very, very strong. It's, again, I want to clarify, we cannot declare recovery anywhere because we don't yet know where it's pent-up demand in temporary or sustainable recovery. But we've seen a temporary recovery in the United States. Europe, most of Europe, we've seen a temporary recovery other than the United Kingdom. United Kingdom, I think, is still locked down until July 1. But France, Germany, Italy, Spain, you're seeing really strong growth. Latin America is not recovered, and Asia is starting to recover, but not yet recovered. So North America and Europe are extremely strong. Latin America, Asia, kind of a bit behind.
How much do you think getting back to normal depends on a vaccine, or even then, things are going to be different?
Travel as you knew it is over. You're never, ever going to see it again. I'll just say that right there. Travel as we knew it from Valentine's Day and before is over. It's gone. It doesn't mean travel's gone, but that travel's gone. And nobody knows quite what it's going to be because it's really up to the industry to invent the way forward. But again, I think business travel is really, really going to be hit for a while. I think a lot of people are realizing they can do meetings on Zoom. They're rethinking a lot of the conventions and conferences. People are going to rediscover the outdoors. For example, there's 400 national parks in the country. Most Americans have never been in a national park. Most Americans don't even know they live within 200 miles of a national park. I think one prediction, national parks are going to be in. People are going to travel a lot more outdoors. These are things that are going to happen. And the other thing that I think is going to happen is travel and living are going to blend together. What do I mean? Well, if you can do your job from home, then if you can work from home, you could theoretically work from any home, anywhere in the world, so long as you're in the right time zone. And so what you're going to start to see is not just travel redistribution, but you might see, and no one can say for sure, population redistribution. People may start moving to smaller towns and communities, or they may say, I'm going to live a few months here, a few months there. Why couldn't you if you can do your job behind your computer? And so we're going to start to see a real fundamental rethinking of travel and probably even urban living.
Meantime, in the midst of a pandemic, you've launched online experiences so you can get an Olympic athlete lesson. You can participate in virtual Pride festivities. How popular have these experiences been, and how big could this be in terms of being part of your business going forward?
I think that experiences could be as big or probably bigger than our homes business in the long run. It's going to take a lot longer, but it's possibly a bigger idea. The biggest asset in your life is not your home, it's your time. And just like COVID is going to, like restaurants are shut down, sports are shut down, we're going to see is a whole new era of entertainment. And I don't think it's not just going to be streaming. People are going to want interactive experiences with one another. Instead of just going to a restaurant or watching something at home on Netflix, maybe there's a third thing you can do. And if you don't want to leave your home, you can actually have an experience. I think in the long run, the overall category, it's going to be a really, really big category.
Airbnb was going to go public this year. You had the S1 ready. It was going to be potentially the biggest stock listing of the year. You haven't ruled out going public this year. Where are you with that?
We were ready to file March 31, so we'll be ready to file again. And the real question is, when's the world ready for us? And are they ready for us this year? Are they ready for us next year? Hard to say. I will say that we're recovering faster than we thought, but I also don't want to have false hope. Hope for the best, plan for the worst. The market seems like it's recovering, but again, there could be a double dip. So we're going to kind of play it by year. I want a little more data. We're still a little early in this crisis for me to feel clear enough about how this is going to play out. So we're not rolling it out this year, but we're definitely not committing to a timeline right now.
So how likely is it that it would happen this year, and how do you weigh those uncertainties?
I wouldn't want to speculate or give a percentage. So I can just say it's on the table, but we're definitely not committing to it. The fundamental questions are, does travel continue to recover? Number two, is it a sustainable recovery, or is it just pent-up demand? Number three, does the market have an appetite for companies listing that lost a bit of appetite after the IPOs last year, and then WeWork, like people kind of lost appetite a little bit. It seems like appetite's coming back. These are really fundamental questions, and if those things start to align, you start opening up a bit of a window.
I'm wondering if you've thought through this. Why aren't you already public? Should you have gone out earlier? Was that a mistake?
I think we're going to look back on this period, and when we go public, I think it will be successful. And I think that people will be really happy. And I do think we'll be public sooner than later. I just don't know what sooner means. But I mean, I actually think we'll look back at it, and hopefully it will play out well. I mean, I just want you to know, we have a real responsibility to our stakeholders. It means a lot to me that employees have a significant part of their net worth in our stock, that we have shareholders that held the stock for nearly a decade. And so it's really important to me that they get liquidity. But I also think that, we're going to have a really great year ahead of us. So I think things could work out for people.
I wonder if Airbnb expanded too much, too far, too fast. And if hindsight's 2020 now, I know nobody was prepared for a pandemic, but do you think that was a miscalculation?
I think that we were a little unfocused, and we strayed from our roots, and we strayed from connection, belonging, and hosting. And we were pursuing a lot of things. These were worthy things. Somebody once told me you can do everything you want in life, not at the same time. Well, when you get really successful, you tend to think you can do everything at the same time. I think that's a really big mistake that a lot of founders made. And I tried to do probably too many things at once. It wasn't as clear until COVID happened and we had the discipline. I think we all looked at it with fresh eyes and realized we need to be leaner, we need to get back to our basics, and we need to be focused. And then hopefully that more focused company will grow even faster, and then we can launch new things, and then we can scale, expand, be big again, but in a more focused way, and then hopefully hire people back that we lost.
If you were to go public this year or in the near future, it would be a traditional IPO rather than a direct listing, because you could bring in new money that could be used to refinance the debt, and you could pay that down without having to deal with the interest.
I think that it could be, there's a lot of ways of doing this. You can do a private round, then do a direct listing. You can do an IPO. You can, there's a lot of options. So I think we're looking at all options right now.
Airbnb CEO Brian Chesky there. More of that interview tomorrow on the show. Thanks for watching. This is Bloomberg.